When exactly is the company planning to pay out the next round of dividends? Let me take a moment to remind you that we have already successfully paid out dividends 6 separate times in the past. We actually started doing this from the very first year of the company's existence. Back then, it was considered a breakthrough result, primarily for the internal team itself. We saw clearly that we were capable of earning real money, even while operating as an early-stage startup. It became quite clear that we understood this specific market, that we could create genuine added value and distribute it as dividends among those people who, back in 2019, 2020, and 2021, believed in the company at the highest levels of risk. And we are still incredibly grateful to them for that initial trust. I think you can clearly see the results we have achieved so far. In the year 2024, we made the choice to suspend dividend payments, and this had a very positive effect on the overall growth of the company. Our product portfolio expanded significantly, and we made substantial progress in our core competencies. In other words, we simply chose to reinvest that money back into further development. We spent the year 2025 under the same general approach overall. I sincerely believe this is a very sound and strategic path to follow. Therefore, the question of dividend payments remains open for the time being. In January 2026, we will be summing up the final financial results of 2025. And in fact, based on those results in January, we will make a final decision on the possible payment of dividends. But let us think this through together very carefully. Over the course of 6 years, we have paid out a total sum of about $350,000 in dividends. Is this a significant amount of money? Maybe it sounds quite impressive, but when we distribute it among several thousand of our individual investors, we must face the reality of the situation. The maximum one-time dividend payment was, I think, somewhere about $3,000 or $5,000. Of course, this only applied to those holding large share packages. However, many investors still have relatively small portfolios, so the total amount gets diluted. Are we able to pay out several $100,000 right now? Most likely not, because our current profit level is still at a different mark. For example, let us imagine if there is $100,000 available to distribute. That is 3 times more than our previous payouts. But even then, many people would receive just $5 or $10. Would you truly be happy with such small dividends? That is a big question. When the audience is large, there usually are not that many people satisfied with any particular outcome. But look, is this amount significant for the company itself? Yes, of course, it is very significant. In terms of our expenses, we could use these funds, for example, to release the first batch of AI trackers or smart glasses much earlier. We could sell them at the right time, faster, and at a higher price point, effectively turning that $100,000 into $300,000 or even $500,000. As a manager, I would obviously choose the second development option. This is the inherent complexity of management. Someone always has to make a difficult choice. That is why we are now considering several different scenarios. One of the options, which is frequently used in the practice of various large companies, looks like this. I am studying it closely, and many people on our team are working on it. We could fix this amount, say $100,000, and say, look, the company needs this money for business purposes. We know exactly how to turn it into a batch of devices and make even more money from it. This is a simple but very real-life example. At the same time, let us say there is a sum of $100,000. We allocate these funds for certain specific development goals, which accelerates us significantly. However, for the same amount, we could, for example, issue 100,000 preferred shares or common shares, which are then distributed as dividends. In this scenario, the company maintains its momentum and uses the incoming funds as efficiently as possible. The audience, in turn, receives actual company shares. If we succeed, these assets will be worth more, and possibly much more, 5, 6, or even many times the current valuation. This is one of the working options, and we always keep it in mind. Therefore, based on the results in January 2026, we will make a final decision, either to distribute cash in dollars or to implement this share-based scheme, or to forego these options altogether and simply continue to develop and move strictly according to the previously outlined plan. Both options are absolutely market-based and fully justified. The company always acts in the interests of the majority of participants, and most investors came here precisely for profit. And if getting that profit requires waiting a little longer, that is a completely normal and standard business practice.